All right, let's talk about something we all deal with, and let's be honest, most of us dread, the U.S. tax code. It's this giant, confusing puzzle that can feel a little bit scary. But what if there was a way to make it, well, simple? Today, we're diving into a really cool idea that proposes throwing out the entire system and replacing it with just one single, smooth formula. Let's get into it.
First off, let me ask you something. Have you ever been worried that getting a raise would actually bump you into a higher tax bracket and somehow leave you with less money? It's a super common fear, right? People call it bracket anxiety. And while technically it's a myth, a raise won't lower your pay, the fear itself points to a huge problem in how our tax system is designed.
So the system we have now is officially called discrete marginal brackets. But a much better way to think about it is like a staircase. As your income goes up, you climb these steps. Each step, or bracket, has a higher tax rate than the one below it. So your first bit of income gets taxed at a low rate, the next chunk at a higher one, and you just keep climbing the staircase.
And this whole staircase model? Well, it creates some real headaches. It's confusing, for one. Most of us need special software just to figure out what we owe. And it's this design that fuels that bracket anxiety we just talked about, that feeling of facing these sudden, jarring jumps in your tax rate as you hop from one step to the next.
It all just feels so unnecessarily complicated, doesn't it? And that leads to a pretty powerful question. What if we could just get rid of the whole thing? All those pages of IRS tables, the software, the confusion, what if we could just replace all of it with this, a single, elegant math equation? This is the whole idea behind something called the smooth tax. It takes all the logic of our current tax system and boils it down into one continuous function. No more steps, no more buckets, no more staircase.
Okay, so here's the first of the two main formulas. This one calculates your effective tax rate. That's just a fancy way of saying the actual bottom line percentage of your total income that you'll pay in taxes. Don't get hung up on the algebra just yet. The idea is simple. You plug in your income and it spits out your overall tax rate. That's it. And here's the second one. This calculates your marginal tax rate. This tells you the tax rate on the very next dollar you earn. This is the number that jumps all over the place in our current system. But in this model, it also becomes perfectly smooth and predictable. Now I know what you might be thinking. Great, you replaced a confusing table with a confusing formula. But here's the really cool part. These formulas, as complex as they look, are built from a surprisingly simple and intuitive recipe. And this recipe only has 3 ingredients. First, you have a base rate that everybody pays. Second, you have a maximum penalty. That's the most extra tax you could possibly pay on top of the base. And third, you have the secret sauce, a wealth multiplier that smoothly blends the other two together.
So here's how it all comes together. Everybody starts off paying that 10% base rate. Then, as your income goes up, that wealth multiplier part of the formula starts to kick in. It slowly and smoothly adds a portion of that 30% maximum penalty to your rate. The more you make, the bigger that portion gets, but it's always a gentle, gradual increase.
And this table just lays out the difference perfectly. Our current bracket system is that clunky, jerky staircase with all those sudden jumps. The smooth system swaps that out for a continuous, predictable ramp. So instead of lurching from one tax rate to another, your rate just glides upwards. So why does all this matter? I mean, what's the big deal? Well, this whole proposal really boils down to 4 huge advantages. Let's just quickly walk through them one by one.
First, just pure, radical simplicity. I mean, imagine being able to figure out your exact tax rate, both of them, with just the calculator on your phone. No more looking up complicated tables, no more buying special software. The power to understand your own taxes would literally be in your pocket. Second, it gets rid of that bracket anxiety completely. Because your rate goes up by a tiny, microscopic amount with every single dollar you earn, there are no more scary cliffs to worry about. A raise always means more money in your pocket, and you'd know exactly how much. It's just calmer.
The third advantage is what you could call mathematical fairness. Think about it. Our current tax brackets are just arbitrary lines drawn in the sand by politicians. Why does the rate jump at, say, $89,450 and not $90,000? A smooth, continuous curve gets rid of that. The exact same mathematical rule applies to every single person, scaling up seamlessly.
And finally, this smooth system has a built-in safety valve, a ceiling. So what's the highest your tax rate could ever possibly go? The answer is baked right into the math. It's 40%. You see, the formula is designed with something called an asymptote. It's a fancy math term, but it just means that as someone's income gets higher and higher, their tax rate gets closer and closer to 40%, but it can mathematically never reach it or go over it. It creates a progressive system that also has a clear, predictable, and permanent cap.
So this whole idea leaves us with a really fundamental question. Do we want our tax system to be defined by the complexity of the past, a world of tables, brackets, and cliffs? Or is the future of tax something simpler, smoother, and way more predictable, a single elegant formula? It's definitely a fascinating thing to think about.